Let me do a quick video for you guys. I'm just going to look at DAX30 and the US30. So let me do a quick video. I'm writing it in there in the Discord channel, and here we go. So I have the levels from the days before. Kind of got me confused. 10 o'clock, market moves up, test those levels, immediately get rejected, starts going down because it broke this level, and then it created that high, which was this is really strong pivot point. Let me just go through that now, why it is so important to me. 23rd and 28th of June high. So that's the 23rd of June over here. So this is that's the level from, hold on, where did it go? See, that was an important level because here price actually dropped really strongly from there. So I had that level for a while, and then 23rd, hold on. So we have the 23rd, and then we have the 28th, or is it 29th actually, not 20, I'm getting confused. Here it goes. So that's the 23rd of June, that's the low, and then you have the 28th of June, high here, high here. Let's just mark them, okay? Mark here, mark here. That doesn't really help, but anyway, it's already marked. And then yesterday it bounced against it once, then it became a support twice, and then this morning, let's mark this area, go to the 5-minute chart. See, it created that zone over there. I wish I saw it this clear if I was on the 5-minute chart, but I was stuck on the 1-minute chart. I was trading this stuff. I was doing this, and I was looking at this, and then around this time I did not know what to go short. My brain was clogged this morning. I can see that. So I didn't see this. Emma took it, and Sam took it on the breakout, and other people as well. And I then traded, scalped on the 1-minute chart throughout this period. But now when I look at it, I had two really easy entries on this. Like, one is this pullback. So you have trend candle, 4 trend candles with a pullback, and it pulls back to this important level, right? And then you have a trend candle, easily go short there, but I wasn't on my A game at the moment. So a 30 stop loss, and after that you just had to trail the candle and all the way here. But it was a really fantastic day because I traded it all the way from there, scalping on the 1-minute chart. Let me just show you on the 1-minute chart. So this is what I was doing. I found this here. This is what got Emma out of this trade. She enjoyed the trade because she was looking for a winner, not knowing that she's just leaving just before the big bloodbath, if you want to call it that. So I went short there, kind of got out, went short, got out, went short here, got out, went short, got out, and it kind of stayed sideways. Then it broke down, went short, got out, went short, got out, and then it turned into a trading range. So I want to talk about this. You see this, that's the market cycle. So over here, you know that the market is trending. So have this trend line, just a arbitrary trend line, just connect 2 or 3 at least 2 points in the market over here, here, here. And then what happens is that when this happened, the move up was strong, but you're still in a downtrend. You can actually trade short here, and when it tapers around here, it does not break the low, and now you know that it's been going all the way down there, and it starts to go sideways. Now you know that you're in a trading range. There we go. Mark that as a trading range and see if it breaks that. When it breaks it over here, now you have a trend reversal. So go to the 5-minute chart. What do you see? Even on a 5-minute chart. So let me delete that first. Let me delete this as well. So over here you have the 1, 2, and the next 3. So the Elliottian would be looking for a 5 down, but that's not what the market does all the time anyway. So if you're looking at the market at only the price and the market cycle, so that's the momentum breakout. This whole period, this whole phase is the momentum breakout phase. Now, it's not a guarantee that market would always go out of the momentum breakout phase and then go into a trend channel, which could happen many times. But in this occasion, it did not happen. It was just going down, breakout, and then it kind of went almost more than its daily average range, started going like a barcode, right? Black, white, black, white, black, white, and it's going sideways. It's not breaking the highs and the lows. So, and as soon as this breaks over here, you have this change. So the first change is, you see, this is your one phase, the breakout phase. Then it turns into, if you have a moving average, it's not going to update itself, telling you. But if you're looking at the price, you know that by this time the market has changed. It's not a breakout phase anymore. It's a sideways market now. Whichever way it breaks out will be the deciding factor, like what would happen after that. So as soon as it breaks out here, pulls back and starts going, it breaks out again. Now it's in an uptrend for that time frame, and that's the most important thing. So if you connect these two, it probably goes too shallow, but then after this was created and you connect these two just as a thing, right, just to see what is going now, so you know that during the session as an overall DAX is down, and this is that pullback. So you're expecting that you probably will see a pullback. Let's go to the 15-minute chart right over here. I actually went short on this based on this, and that was because it went up, pulled back, went up again, and Elliott wouldn't see it as 1, 2, 3, 4, 5, like, or a ABC. So that was a very nice way of looking at it. But if you have the trend lines, or the phases that you're looking at, so you have the breakout phase here, sideways, then it breaks out, pulls back. What do you see now? You are seeing a wedge, right? Because you have this high and that high, these two highs, and it's squeezing. What happens when it breaks out? You go short. I did actually go short here. I actually added on in here as well. Now, guess where it stopped moving further? One can argue that it's the 25th of June or the 22nd of June that earlier we marked, or you could just simply say, oh look, it's come back to that low again and it's losing momentum. It's gone into that sideways zone. What's it doing? Probably it's going to break out from there, and that was the New York Open. Now, I didn't trade this because I was doing something more spectacular, which was the US30 here, right? We were trading this. Beautiful session on the US30. Fantastic trades again. So what are we doing? You're looking at those phases, right? Breakout phase, trading range, breakout again, pull back, breakout again, wedges itself, breaks out, pulls back, breaks out, again is a trading range, and breaks out again. And as a whole, this thing, because it didn't break that high and it's still within this range here, so this over here is a trading range. So if you go to the 15-minute chart, there you see that after the breakout phase, this is actually the first time it's breaking below that level. So there you go. That's your 1, 2, but it would be difficult to trade unless you knew that, or you consider that as a trading range high. You could easily have gone short there. You probably would get out here because now it's a low of the trading range, unless you actually go out half and then anticipate that it might be a breakout here. Anticipating a breakout is really something that we shouldn't do, because let the breakout happen and then try to get in. That's the best thing. So let's go to the US30 chart now. So what does US30 look like? What has it done? Well, this is what it's done. Let me actually bring, so that's the breakout phase. You can see bullish candle, bullish candle, bullish candle. There is one attempt by the bears to actually take it down, but immediately these lows got bought, right? What am I doing? See these lows, as soon as it goes below, and this is my long from here as well, and then I got long there as well. You have selling happening, so there's a lot of selling, because that's what US30 is. It's wild. It goes up and down quite a lot, so it was difficult to hold, because every time it went up it came down. So between these levels, these wicks, you have quite a lot of selling going on, and the sellers are probably making money. And now here you have another wick around 18 points. Then it's a smaller wick. Again, these two candles are good. These two are really scary candles, because it made me think, oh, You know, when I was long here, it goes all the way up and comes down. You're like, oh God, you know, I should have taken 35 or something like that, but held on, trailing candles all the way up. So look at this. This is your breakout phase. So this is one type of trade that happens at the open. We love that. This is what we call the neobot. The neobot is the New York Open breakout trade. You want to see the breakout. That's that first candle which breaks out and closes outside its levels to the left, and it's a really strong trend candle. What you do is you wait for that one more candle, or you just get in here. But if you get in here, your stop loss will be there, so that's 50 points, right? But if you got in here above this candle, then you can have like 30 or 40 stop loss, which would be better. I go with 50 stop loss on any entry anyway, or for US30, current volatility based. And then you go long there, then you can just hold it the way it is. But the idea is that you want to catch that breakout. And what is that breakout phase? This is the breakout phase with no pullbacks. And that's your first pullback. So as soon as you see the pullback, then you know that the market is now changing. It's changing from very strong buying to kind of the bears are now taking a little bit of control. So what happens? It turns into some kind of a, this is probably wrong. You can mark it that way or something like this. So you have a slight trading range, not trading range, a trend channel, but that immediately gets broken. Price comes down, finds support, and that's your first, or maybe call it second, but I would really call it the first pullback. This is literally a pause only. That's your first pullback, went long again, and because the market has moved about 200 points, I think the ideal thing to do would be just take that 30 at those highs, and I got out. Comes back to it, struggles to break this low. I did actually go long there, but got out quickly on 13. Otherwise, I probably would have gotten out here for minus 30. I don't want that. And I think there's another one here as well. And then I went long here and there, but it kind of was messing around, so I got out of it. But then realized that, okay, it's still going again. So I took this breakout, and then I took that one and got out there for half, and the rest of them got stopped out. Now look at this. Price comes back to it, retests those highs, and starts to go up. So there was another trade there as well. So what's it doing? You have a breakout phase, then you have a trading range actually, but a wide trading range. Let's mark it that way. If you look at it, that's a trading range, up and down and up and down, then it breaks, creates another trading range over here, tests previous levels, and then goes up. And now it doesn't really have that momentum the way it is. The problem is that when a day trader starts trading, they will trade the breakout in a certain way, and then the breakout phase has changed. Now the market is going to a wider trading range or a trend channel, but they are still trading this way. They're still expecting these results, and that's what gets them in trouble. I was very much aware of this. We were talking about it in a Discord chat. And when you have the pullback, just trade the pullbacks and, you know, 1 or 2 ATRs. Now, if here there was a chance of another breakout, this is a breakout anyway, but not as strong as that one. But it could happen that you take another breakout and it just starts going. What do you do in a breakout? You just keep adding on and keep trailing the candles. So that's what it is. I think it's important to understand how the market breaks out, then it kind of loses momentum, goes into a trend channel over here. Then it starts doing the pullbacks. This is the deeper pullback, and actually 2 double bottom here. So this was a trading range for that moment. You have to decide whether you want to trade inside a trading range or not. For example, if you look at the DAX M5 chart, a breakout phase, and then you have a pullback, and then you have a trading range. But the thing is, did you actually see it as a trading range? So around here, I did actually see it as a trading range, because I saw low here, high here, another low here, and price was starting to go up. This was definitely a trading range. So if you didn't take it here, then around here, it was quite proven to you that it was a trading range. You could actually short here, put stop loss up there. If not there, then over here, you could have taken another one and up there. And I know I'll get a comment of a great hindsight trader, and I don't mind that. Because I did all of this almost live. I wasn't streaming my screen. I don't like doing that, but we talk about every position in the chat room, like so. you know, it's just lines and lines and lines. As you can see over here, I am, you know, every time I take a position, I try to take a screenshot. Actually, it gets me into a lot of trouble, you know, doing this, because I can miss my entries, but I like doing it. People like it as well, so there you go.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.